Meantime, President Trump signing a trio of executive orders on artificial intelligence. They're focused on loosening environmental rules and expanding AI exports to the U.S. allies in an attempt to keep the U.S. ahead of China in that technology. At an event in Washington, the president also called for a single federal standard for AI regulators. Now, we're going to be talking a lot more about this later this hour. But before we do, here's an interesting moment from yesterday's event.
I said, look, we'll break this guy up. This is before I learned the facts of life. I said, we'll break him up. They said, don't say it's very hard. I said, why? I said, what percentages of the market does he have? Sir, he has 100%. I said, who the hell is he? What's his name? His name is Jensen Huang NVIDIA. I said, what the hell is NVIDIA? I've never heard of it before. He said, you don't want to know about it, sir. I figured we could go in and we could sort of break them up a little bit, get them a little competition. And I found out it's not easy in that business.
It's not easy in that business. There's a lot of people who would like to break them up or at least try to compete with them.
And have been trying.
And have been trying to compete with them. The goal ultimately is to figure out a way to get cheaper processing chips. I mean, that's going to be the whole.
Sure. But I think NVIDIA is working towards that too. Been working towards it, so it's not, you know.
I don't know about that. I don't think they want cheaper chips.
Making sure that nobody can outflank them. That they've got to be better than anybody who comes in.
Sure, but as long as they have the better chip, they're going to be able to charge the higher price. And as long as these prices are where they are, the model of AI doesn't fundamentally actually work for so many of the LLMs and all of the providers because the cost is so high. I mean, I think
but this is the huge reason that we're winning in the AI war. This is a big part of it. You've got so many things that have happened with this.
Yeah. No, I'm not. I would like them to succeed. I don't not want them to succeed. I think that ultimately for the U.S. to succeed, Amazon will need to succeed with its chips. Yeah. Others, AMD is going to need to succeed, and the price is going to have to come down because we're winning a war that's sort of works and sort of doesn't. Meaning meaning AI sort of works and sort of doesn't, partially because the economics of the AI ecosystem are broken. And part of the reason they're broken is because so much of it goes to the chip maker. And if it all goes to the chip maker and the other guys can't make any money doing it, then the whole thing sort of eventually gets very complicated.
I think if you were to ask Jensen Huang, though, he will tell you prices are going to come down. And has said that.
Right.
You know, prices will continue to come down, just like we've seen with all technology along the way.
We can all hope they haven't in this case that much yet. We'll see.
They've gotten better and better, though.
Well, because they've gotten better and better, and that's the. Anyway,
we're only, I would say, months ahead of the Chinese models. They've done a good job with models like DeepSeek and Qwen. But if you go deeper in the stack, we have, I'd say, more significant advantages. So when it comes to chip design, our leading company is NVIDIA. Their leading company is Huawei. I would say that NVIDIA is still a couple of years ahead. Then you go deeper in the stack to chip manufacturing, and you've got TSMC on the western side of the ledger, and they're several years ahead of the Chinese national champion, which is called SMIC. So it just depends on what level of the stack you're talking about. But I think the most important thing is that we try to maintain this lead. We don't want to sacrifice it. And I think President Trump brought up a few really important ways of doing this. Number one is we have to unleash American energy. The new AI data centers, the new infrastructure we need to build is very power hungry. It requires a lot of electricity. And President Trump signed an executive order to build out AI infrastructure. And he's understood for a long time that we have to drill, baby, drill. We have to build, baby, build. We have to, again, if you want to have AI dominance, you've got to have energy dominance. So that was a huge part of the speech. Another area that I think is very important that President Trump talked about is AI exports. We want the whole world using the American tech stack. We want the world to consolidate around an American standard. If we don't provide that standard, Huawei surely will. And so I think President Trump brought up that, and he signed an executive order to make AI exports easier.
David, real quick competition question. The president made a fascinating comment in his speech. He might have been talking to you, where he said he was asking about NVIDIA. He didn't know what NVIDIA was. And somebody told him that basically they own 100% of the market. He wanted to actually break them up, he said. Was that conversation with you?
No, I wasn't. I was not part of that one.
Wasn't you? The second related competition question, therefore, becomes, though, do you think we need a lot more competitors, both in chips and even in LLMs? I mean, one of the things we've started to see is because a lot of the big companies can't really, I think there's a view that regulators wouldn't allow combinations, that there's this whole acqui-hire trend. And I'm curious sort of where you land on the competition and acqui-hire world.
Well, I think what we're seeing right now is ferocious competition, especially at the AI model level. And I think that's good, and we want that to continue. At the chip level, it's true that Jensen has very high market share, but that's a result of him being so ahead of the curve on GPUs. I mean, he's been working on this for 30 years. When everyone else was focused on CPUs, he had this vision around GPUs. And so, in America, we don't punish winning. We don't punish success that comes from as a result of being visionary. And I do think, though, that NVIDIA, although they have high market share, they have a lead, but it's such a competitive industry still, the semiconductor business, that if they don't stay on top of their game, then they could lose to a number of companies that are challenging them, including startups. So I don't think we have a huge competition problem here. I think quite the contrary, these markets are very competitive.
Yeah, it was that great.
By the way, the CapEx number also, $85 billion, it goes up from what had been a $75 billion number, so they increased that. And as you'd expect, it's going into GPUs and data centers. The numbers, as I always say to our viewers, every time we get these reports, are just staggering to think that a company's $85 billion in capex. It used to be AT&T, which reported yesterday, or the Verizon, 20 billion. Yeah. You're like, wow, that's a big number. $85 billion, and obviously, then you've got Microsoft in there at similar levels, and you've got Meta in there at similar levels, and you've got Amazon.
And we're going to hear all capex go up. It's all NVIDIA.
Is it good for NVIDIA? This $85 billion number.
It's really good for NVIDIA. But of course, NVIDIA, the president thought about breaking them up. We'll get to that later. That was an out-of-body comment, kind of.
I didn't even see that. Who's the
president? Oh. So he was so powerful. Maybe we want to break him up.
Wait, but then he was told it would be too hard.
Yeah. And I'll tell you, Jensen, the president has a good relationship with Jensen. It's not like Elon Musk. It's just we want this man to do what he wants to do.
Speaking of breaking up.
But reports suggest Google and Meta might pivot to Taiwanese custom chip designer MediaTek for cheaper AI chips. DigiTimes, which is quite popular in the chip world, says Meta's eyeing MediaTek for an AI inference chip by 2027. The Information adds Google's exploring MediaTek as well. Analyst Daniel Newman tells me Broadcom's still very much in the mix for Google's high-end chips, but MediaTek's cost advantage could pressure margins and signal tougher competition in custom silicon in the next few years. And this isn't just Broadcom's problem. It also spells trouble for NVIDIA, too. Custom chips, or also known as ASICs, can be more efficient for specific data center tasks. NVIDIA's GPUs offer flexibility, but as AI workloads mature, companies may prioritize speed and cost over versatility. NVIDIA's CEO Jensen Huang dismisses the threat in public, at least. In March at GTC, their tech event, he said, quote, "The ASICs still has to be better than the best." Last month in Paris, in early June, he added, "I'm delighted to hear everybody's interested in building ASICs. All right. I do believe most of them are gonna get canceled." He insists NVIDIA's scale and CUDA software keeps it ahead. Chip analyst Ben Baharan says custom chips take years to scale. Broadcom's bullish pipeline keeps them confident for now. Still, with MediaTek gaining ground, the custom chip race is definitely getting fierce for both NVIDIA and Broadcom.
But the CapEx spend, take a look at NVIDIA. Look at Broadcom. New record high. Where's the CapEx going?
The street is telling Google they want them to be aggressive. The reaction to the increase in CapEx spend, without question, the street believes that being a top 3 player in AI is an existential necessity for this stock. And that's what I think you're seeing playing out on the screen today. Had they just merely reaffirmed or said, yeah, things are good and we're going to leave things the way they are, I don't know that you get this upside result. The street really wants to see these guys spend as though they have to win the war, because quite frankly, to Malcolm's point, they do have to win the war.
Which is why I feel like, I want your take on this, the questions about return on investment, I don't feel are all that relevant yet. We ask them because we feel compelled to ask it. If you're spending X, you expect something in return for it. Well, maybe it's impossible to quantify what the return on that investment is going to be for another 5 years. I don't know. But why do we ask that question? I think that's the right take. You spend it, the street is rewarding you for the spend, not the reward yet. It assumes you're going to get the reward.
I would argue there is a reward we're not paying enough attention to right now, which is the revenue per full-time employee. If you look at Microsoft having something like 15,000 layoffs in about 9 months, and the fact that they become so much more productive that their revenue per full-time employee has grown, these companies are all chasing NVIDIA right now. NVIDIA is approaching $4 million per employee is what they're actually seeing in revenue. And the closest person to that, I think, is Alphabet with like 2.2 million per employee following, and then the others behind it, Microsoft closer to the bottom, and then Amazon includes, factory workers, so we don't really know what their number looks like. But that is the return. These companies are able to do a lot more with less, and so they're basically saying to their employees, do the thing that you are best at, the thing that you are most capable of doing, and then let AI do the rest. And so we're going to use this as an internal productivity tool first, while we figure out how we're going to monetize this to the rest of the world 5 years from now. And so I think it's a both and, not a either or.
And then finally, let's bring it back to NVIDIA, unless there's anywhere else that, is more top of mind for you. But NVIDIA in many ways is the linchpin, right? It's if the AI trade continues apace, if Google's winning and all the rest of it, does NVIDIA still feel like the stock you own or not? Or is there a rotation to other names that you think are more exciting?
No, I think I'm going to stick with a winning horse because the volume is going to continue to accelerate. The market share is going to continue to accelerate. I'm also very interested in AMD, which I already own, full disclosure. But, to me, this is very much in the early days of a multi-trillion-dollar change that will transform our planet. So I'm going to buy the haystack, not worry about the needles. This is a trade that I expect to stay with for many, many years to come.
Buy the haystack and not worry about the needles. That's a good line. Keith, thanks very much.
It just depends if you're trying to beat the S&P 500 as an institutional manager or if you're just an individual who's trying to make some money. If you're trying to beat the S&P 500, you're going to own loads of the Mag 7 and other big companies because, look, NVIDIA is $4 trillion cap. If it goes up 10%, that's $400 billion. There's only 15 other stocks or 20 other stocks that are even $400 billion in aggregate. So if you're trying to beat the index, you're going to own a lot of those. If you're just saying, make me the most amount of money, sure, there's tons of other stuff that can go up way more, and, disinformation security or polyfunctional robots or post-quantum cryptography. There's tons of cool tech stuff underneath, but of course you're beating the S&P, you got to own NVIDIA.
All right.
Of course.
We're going to leave it there.
Yeah.
You see $85 billion that they're spending. Does it make you love NVIDIA even more?
Yes.
It's your biggest position.
It is. I think what is very clear is that if you look at the amount of usage of AI, it's just exponential. I mean, I looked at my own usage a month ago, and it's a 30-fold increase in the last 8 months of number of tokens that I've used in just ChatGPT. And if you look at where we are in terms of adoption rates of AI, we're just starting with the general population. So, if we think about what's about to happen in terms of usage and the compute needed, we're at the very early stages.
You made me think of something.
When you hear about this spending, you should be thinking one thing: NVIDIA. You can't be dominant in search unless you buy the latest and greatest chips from Jensen Huang, the CEO of NVIDIA. The naysayers tell us that spending is a big waste of money. But if you listen to Jensen, he says his best hardware and software stacks can give you 4 times your money's worth. Given what Alphabet said last night, you know what? I think it probably works out to about 4 times. Now, NVIDIA is not a tax on the system. It's an expander. It's a force multiplier. That's why it is so important for the U.S. government to allow China to have a version of NVIDIA's AI technology. We tend to assume that China makes everything we want while needing nothing from us, aside from those NVIDIA semiconductors. That's not really true. We're beginning to get cheaper products from elsewhere, by the way. We know from Judy Marks, the CEO of Otis, the elevator company, that China's business is miserable right now. We know from Jim Fitterling, the CEO of Dow Inc., that China's no longer the cheapest place to make plastic. Just pick those two because it happened in the last 24 hours. Really, China's got 2 things going for it. It's got electric cars and first-class military. But what it needs more than ever is NVIDIA's chip stack. That's the only reason they're willing to make a deal with us on trade, even releasing their chokehold on rare earth minerals. NVIDIA.
All right, I hope you're all doing great today. We have multiple pieces of NVIDIA news to cover. First, the Financial Times is reporting that at least $1 billion of NVIDIA B200s were smuggled into China, evading export controls. NVIDIA responded to the report in a statement to CNBC saying, quote, trying to cobble together data centers from smuggled products is a losing proposition, both technically and economically. Data centers require service and support, which we provide only to authorized NVIDIA products. I don't view this situation as negative for NVIDIA, and I think it's important to remember that NVIDIA is not the one to blame in this situation. NVIDIA NVIDIA is simply selling their product to authorized customers, and they have no control over what those companies do with the product once it's in their possession. While this situation may be viewed unfavorably by some in Washington, I think it highlights the fact that the strategy of containment has largely been ineffective. Therefore, while the U.S. prohibits the sale of NVIDIA's latest chips to China, perhaps the U.S. will eventually allow something better than just the H20 to be sold in China in the future. That way, Chinese companies would feel less of an urgency to obtain more powerful chips through backdoor methods. There have been a lot of rumors and reports claiming NVIDIA will not restart production of the H20. At the same time, there have been other reports claiming the opposite. Whether NVIDIA restarts H20 production or convinces the White House to allow a new chip such as the B30 into China, I don't know. Regardless, China should contribute meaningfully to NVIDIA's revenue in the future once these issues are sorted out. In yesterday's video, I mentioned the White House's AI action plan that was revealed at yesterday's AI summit. The plan aims to reduce AI regulations, speed up permitting for AI infrastructure, such as data centers and chip fabrication. And here's what really stood out to me. The U.S. government will actively work to export American full-stack AI technology packages around the world to the United States allies. This, of course, would include NVIDIA's products, and I think we're likely to hear about more sovereign AI deals in the future as a result of this initiative, which is positive for NVIDIA. Many high-profile CEOs spoke at the AI summit, including Jensen Huang and Lisa Su. And guess who else spoke at the summit? The CEO of MP Materials. I posted a video about MP Materials recently, and I seriously encourage you to watch that video. I am very bullish on the long-term future of MP Materials, and I do not think investors are bullish enough on the company. I know that sounds crazy given the recent run-up in MP stock, but it's true. This company's product will be central to the oncoming wave of physical AI. I'm viewing MP stock as an investment to be held for at least the next 5 to 10 years, and I think there's a lot of upside ahead. I seriously encourage you to watch that video in its entirety so that you know what's going on, because this is big. Now back to NVIDIA. As mentioned in recent videos, I expected Alphabet to increase their CapEx guidance given the strong demand we're seeing for AI search, Google's VO3, Gemini, and all of Google's other AI tools and apps. They actually have many of them, which most people are not aware of. Anyway, I also expect Meta to increase their CapEx guidance this earnings season, given recent announcements that Meta plans to build multiple multi-gigawatt data centers and spend hundreds of billions of dollars on compute build-out in the coming years. I fully expect Meta to raise their CapEx guidance when they report earnings. Microsoft and Amazon are the two hyperscalers I have less visibility on this quarter, but I would expect them to report strong CapEx guidance as well, given the strong AI demand and rising competition that we're seeing. As I've been saying for many months now, I expect 2026 to be another growth year for NVIDIA, and I think many market participants are finally starting to realize that. I also really like the setup for NVIDIA in the second half of this year, and I think NVIDIA will report very strong Q3 and Q4 results given the production ramp of Blackwell and the launch of Blackwell Ultra. Blackwell Ultra has launched and should really start a ramp in August and September. And then we have Vera Rubin coming up in 2026 with the Vera CPU being NVIDIA's first custom CPU, and a single Kyber rack being able to hold 576 Rubin GPUs, 8 times as many as the current Blackwell systems. We have a clear data center product roadmap stretching into 2028. NVIDIA's moat across the entire stack remains intact, stretching across both hardware and software. NVIDIA's software offerings in CUDA are a massive benefit for maintaining the company's moat. If developers build on CUDA, they want to remain on CUDA, and that is massively beneficial to NVIDIA. And NVIDIA is providing performance upgrades that directly increase their customers' AI revenues so substantially that clients have no choice but to continue purchasing NVIDIA's latest products in large quantities. NVIDIA will play a crucial role in the future of quantum computing, as they are working with just about everyone in the quantum industry right now on NVIDIA's CUDA-Q platform. NVIDIA is really just starting to bring AI to the world's enterprise IT, which Jensen believes is an opportunity worth hundreds of billions of dollars. Inference demand has exploded, and AI agents are really just starting to go mainstream. And Jensen believes the world's computing capex will reach $1 trillion annually by 2030. All things considered, I think NVIDIA will be worth substantially more in the years ahead than it is today, and I continue to be bullish on the long-term future of this company. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.